What's going on, everyone? So today we're going to take a look at AMC SEC potential rule changes coming up this Monday, supposedly. So what I'm looking at right now is the SEC, the actual file SR NSCC 2021-002. So I'm going to give you a quick run through to what they actually have stated in the files, and then I'll give like some overall definition on just some technical terms afterwards. But technically, if everything goes as planned, we will have a confirmation on the decision supposedly this Monday, right? At least that's what they state, unless they extend it or change it. But for now, let's just take a look really quick what this says. And in case you want to go ahead and Google this yourself, just copy this SR, basically this numbers in letters here, and then you'll click on the files and you can see it. So pretty much here, and I'll just read through a quick summary and then show you a more, say, basic definition afterwards. But basically, they state here, and this is the clearing agency's statement of the terms of substance of the proposed rule change. And here the proposed rule, it consists of some modifications to these Rule 4A, and says supplemental liquidity deposits of the NSCC's rules and procedures, and rules to number 1, calculate and collect when applicable supplemental liquidity deposits to NSCC's clearing funds. And then they have in parentheses supplemental liquidity deposits, or SLD. And they plan on this on a daily basis rather than only in advance of the monthly expiration of stock options. And they have this defined in the Rule 4A as options expiration activity period. Number 2, they say establish an intraday SLD obligation that would apply in advance of option expiration activity periods and may also be applied on other days as needed. And then 3 is to implement an alternative pro rata calculation of the members of the SLD, which was defined above, obligations that may apply in certain circumstances. And 4, simplify and improve the transparency of description of the calculation, collection, and treatment of SLD, and Rule 4A of the rules as described in greater detail below. Now, I will continue on here and reading more of this stuff, but it's quite lengthy, so feel free to go through this. But in general, let's just go and show you this tweet kind of gives you a pretty good summary, but basically, AMC is set to approve 002 on June 21st, and basically this guy states it's an automated margin call system. From a risk management point of view, the NSCC could request a margin call in hedge funds if they see they're over leveraged, and it aims to eliminate the human interface, which is a cause of bias. Now, if you don't know what margin call is, I'll go over and show you a definition, but here is the additional file here. This is the most updated version I could find. And basically, if you go scroll down, this doesn't show like all the rule details, but pretty much this paragraph right here, and this is where you get the date, if in case you're curious. It says that pretty much the commission designates June 21st, 2021, which is supposedly in 2 days from the recording of this video, is the date by which the commission shall either approve, disapprove, or institute proceedings to determine whether to disapprove the rules change. And pretty much that is not a official approval. It's saying it's going to decide if they're going to either approve, disapprove, or institute proceedings, right? So do keep that in mind. This isn't like a 100% confirmation yet, but assuming things go according to plan, then hopefully everything turns out in the favor of AMC, and we see it actually benefit just retail investors overall. But now, let's go ahead and actually just define some things, right? So here it talks about margin call, right? So let's actually define margin call in case people aren't aware. And basically, this is on Investopedia, so in case you want to research it yourself. But pretty much, margin call occurs when the value of an investor's margin counts. It falls below the broker's required amount. So essentially, an investor's margin account contains securities bought with borrowed money, and that's typically a combination of the investor's own money and then money borrowed from the investor's broker. So a margin call refers specifically to a broker's demand that an investment deposit additional money or securities into the account so that is brought up to the minimum value known as the maintenance margin. Now, we can go in here and pretty much go through more details, but pretty much the margin call is usually an indicator that one or more of the securities held in the margin account has decreased in value. And then when a margin call occurs, the investor must choose to either deposit more money into the accounts or they have to sell some of the assets held into their account. Now, here are the key takeaways, right? So pretty much the first one is a margin call occurs when a margin account runs low on funds, usually because of a losing trade. And then margin calls are demands for additional capital or securities to bring a margin account up to the minimum maintenance margin. And then 3, brokers may force traders to sell assets regardless of the market price to meet the margin call if the traders doesn't deposit funds. So here's big, because if, for instance, let's say you're betting against AMC and let's say you're just over leveraged, next thing you know it, if you don't have enough funds to support that, then guess what? You might have to be forced to sell. AKA, that's generally the assumption, the so-called short squeeze of why everyone says if no one sells and they put a super high sell price or basically a majority hold AMC, which currently right now we're at price 59, the market is closed, so it's not moving. But in theory, if you have to buy back, or essentially you're forced to buy back whatever the price is of the share, and nobody decides to sell at a lower price than it currently is, and it continues to rise up, next you know it, we're going to see at least potentially, assuming this were to occur, the price continue to rise up and up, because obviously as the big boys institutions or whoever is betting against AMC decides to pretty much, they're forced or have to cover what they originally stated, then guess what? They're going to have to buy back in whatever price the holders, aka apparently 80% of AMC holders are retail, decide to sell it at, right? So when you saw GME, for instance, it reached almost, I think 500, maybe it did, but close to pretty much to 500 price per share. And that's because they had no choice, because that's what people were willing to sell it at. And if you're forced to cover and pretty much buy it, whatever is there, then you're pretty much stuck with whatever the price is the market determines. So essentially, that's the goal, or the overall research that everybody's been doing. The old ANC, the apes have been following AMC that's supposedly supposed to happen. Now, with these new rule changes, if I'm understanding them correctly, it's supposedly supposed to deter or prevent some sort of thing like this from happening ever again. But do let me know in the comments below any more clarifications on essentially how you interpret the actual definitions of this, and how it's actually said daily basis, so I think that's better. So that definitely let me know your additional research and details on that set. But if this were to get approved, and next thing you know, it's big boys have to start covering if they don't have enough funds, or if they were to, for instance, let's say they can't maintain their capital, then they actually have to end up buying back. Then at that point, it's going to be a crazy ride for AMC. Now, we don't know if that's confirmed yet, but hopefully by Monday, we get updates on the so-called ruling to see what's actually going on. And then after that happens, apparently a lot of people are saying that's effective immediately. But I don't know if it's going to happen instantaneously. I've seen some other posts and research saying that it could take a couple days, maybe even a few weeks before the hedges or the big boys or whoever's behind everything decides to actually pay off or need to pay off. And at that point, then we could see AMC potentially squeeze up. Now, we don't know yet until we get some more confirmation. So, again, it's just a waiting game. But again, definitely feel free to do your own research, guys, and let me know your own thoughts. Because again, this video, guys, is just my own opinion. I'm just sharing you information that I can find online, and this video is all for entertainment purposes only. But definitely be sure to do your own research before making any investments. And do let me know, what are your thoughts on AMC? If this rule actually gets played in, do you think it's actually going to affect AMC significantly and we could see some movements? Or do you think it's going to be delayed or something else comes up and next thing you know it's just chilling, consolidating sideways and not much action? Let me know your thoughts on this in the comments below, and any other details that could be helpful to other apes and other AMC holders out there. Feel free to comment below, subscribe for more content and updates, and I'll see you in the next video.